Hey, you can carry it. A guy like you can carry it. Hey, the very skinny gentleman who sold that to you, what color did he say it was? Did he say it was tangerine?
Bomb. Thinks in binary. Has a pet ferret named Napalm Newsbomb. Tried to buy a house next to Tim Knight. Tasty Trade. We take all kinds.
Hey Houston, are you ready to rock out with your stocks out? Grab your dry rub and your wet naps because the Squeeze Your Head Tour is about to brand Houston. Tom Haas Saucenuff will be riding a rope one night only, November 9th at the JW Marriott. Email support at tastetrade.com for details.
Shadowtrader uncovered. Shadowtrader Studios.
All right, welcome back. Good afternoon, Shadowtrader.
Get down.
Shadowtrader uncovered. Brad Agonis, Peter Rezicek.
You got it. ST in the house on this Friday edition. Looks like top line figures are mixed. Interesting enough, on this top line figures, Dow, talk to me. I don't think ever went negative.
The Dow has been up all day.
Most of the day, right? Even at the most bearish levels of the S&P.
I think it got flat, the Dow, but
more or less. Yeah, so it's funny how, once again, this leadership thing keeps shifting. Where's the strength? BA,
Boeing, JP Morgan, Pfizer, Utex, and Verizon.
United Technologies, Walmart's got a little strength to it. VZ, right? Maybe?
Yeah, oh yeah,
Or did they take that out? V, that's V.
Visa.
V went in.
Sorry, Visa, not Verizon.
VZ, yeah.
My bad. McDonald's.
Verizon's down a little bit.
Microsoft, Nike, Goldman Sachs, GE, Disney. So quite, obviously 19 of the 30 Dow stocks are up, holding on to a nice gain here. But so anyway, we were talking about how and why things aren't so bearish.
Yeah, they're just not. I mean, basically, a lot of this has to do with the profile, which we're going to go into right now. But the main concern I have here for those that are initiating new shorts, and I think there's a chance that the market does go lower next week. But when we talk about bearish or not bearish, you have to keep time frame in mind, and you have to keep in mind also, like, what are you trying to accomplish? Like, are you trying to make that quick hit, or do you think that this is the top of the market for the year and it's actually going to go lower from here? And that's the point I'm trying to make, is that I don't think this is a top for a number of reasons that we've been discussing on the show and in the blog, about how the overnight high was the high of the move, the value continues to be overlapping the down, the lack of excess. We never got an excess high. Where's the capitulation? I mean, for a market that's been up this long for months and months, I would think that there would be a blow-off type of top, the capitulation that we never got, showing the excess on the profile. None of these signals have really come in. Let's move over to market profile.
Right, so let's do it.
Let's get into some of this stuff more in detail.
Because it's great, I like the fact, everything you're saying, and then I'm going to talk about a couple of things that I see.
Okay.
And because full disclosure, I am short.
Sure.
Not aggressively, but I'll tell you where and why.
Okay.
But let's talk about profile.
So the first thing that I want to point out is this key low at this 1750 area. So what I'd like to do, Brad, is once again, you have the 24-hour data on. Make the whole. I think you've got the whole week's 24-hour data on. So let's just make everything small so we can see everything.
Yep.
And then I'll hold the control for you, and you click on those prices at the bottoms there. Hold on, there we go. Let's just click right there. Great, that's good enough. It doesn't have to be exact. So this is really important. You have an overnight session from October 27th that has a low at 51.75. Correct? That's the area.
27th?
Yeah, right there.
Yeah.
That's the 51.75.
Right.
Look at the next day's RTH session. There's a poor low right there. And this is really key. Let's just draw one arrow right there. That's good. That is a poor low. That means that traders got themselves overly short as the market got down to there, and then they needed to cover. And they covered in a big way, because the next day you made a high, and the next day you made another higher high. So this area is very important and needs to be repaired and needs to be carried forward. So you should still be thinking about this poor low on 1028 as you go further out in time. 2 days later, the market makes its all-time high, and let's just point to the all-time high right there. And yet, when it makes the all-time high, where's the excess? There's just no excess. There's literally just
There's like 7 ticks, I think.
7 ticks, and the 7 ticks are sitting on top of a very fat part of the profile. No real capitulation of the upside. The market sells off, and where does it go? Where does it stop?
Wait, before that though, the regular trading hour high
Correct.
did not take out the overnight.
That's right.
high.
Did not take out the overnight. So
This
from
is key.
a short-term reference here tells you that this is a short point. And this is when I was sending out the tweets before that day. This is the Fed day. I was telling you, initiate a short position. It looks good here. And it was a short for a short while. I didn't make too much off of it. I made a little bit of the initial piece. I put my stop a little bit too tight, I think, on the Fed. I actually got taken out by a couple ticks on the first flush of the Fed. But after I saw how the price action was acting and what's been happening the last couple of days, I'm not really too concerned about it because it's just not really feeling like there's any kind of major downside here. So you have the high made in the overnight session, should be made in the regular trading hour session if the auction is really able to end. On that Fed day, the bulls, the bears did get some relief. The market came down, but again, where did it come to?
Exactly.
Right to the penny. Super duper visual reference. And again, we've been talking about this for ages now on the show. If the other time frame of the pension funds, of the big players, the people that don't use technical analysis, the people that use telephones to trade, literally, right? It's like where you have the hierarchy of the structure and the bigger guys up here, sell, sell, sell. Okay, and, and the traders get to doing what they're doing. They're not interested in prior lows. They don't know the market profile exists. All this is meaningless to them. It's like, I got to get rid of all this stuff. Let me shovel it out the door.
Exactly.
You don't stop at these visual references that way. And yet, what does the market do? It comes right to this area where there was an overnight low and a prior low from the other day, stops, and it bounces hard. And on October 30th, where did we close? Middle of the range. Mm-hmm. We closed in the middle of the range. Then October 30th closes. You go to the night of October 30th. Where's the overnight low?
Boom.
Boom. Right to the same area. October 31st, Halloween. So now we're thinking, okay, we came off the highs. Now this is the second session after coming off the highs. Let's see what happens here. We go 4 ticks below that low and again close above it.
Yep. Boom.
Boom. Close above it. Our settlement value is where? Above the gray line.
That's right.
Last night's overnight high, overnight low. Where's the low?
Yep.
Right to that line.
Right there.
Once again. Today the market opens. It pushes down through that area. Many shorts have to be trapping themselves at today's low because everybody is thinking the same thing. They're not paying attention to stuff like this. They're not digging deep. They're not going under the hood, as we call it. They're just watching price action. So they think to themselves, okay, if the door didn't open on the 4th try, it's got to open on the 5th try. Mm-hmm. Let's short on the 5th test of this area. People did that today, and where's the market trading right now? Below that area or above that area?
That's right.
It's trading well above that area. So again, shorts are getting rebuffed here. So you put all these things together, and hence, that's my argument. It's not that bearish out there.
That's exactly right.
That's it. That's basically it.
I mean, I totally 100% agree with everything you just said, and hopefully, other people, it makes sense as well. Now,
it's objective.
It's completely objective.
It's objective, and it is definitely what's going on. And I should also mention, which we didn't talk about yet, is the value over the 3 days down, where we've made lower low in the market, lower low, 3 days, right? We stopped the one-time framing phenomenon, which was in place since October 9th. The value is continually overlapping. It is down, but it's continually overlapping. So it's like this, and then the next one like this. They're all touching each other. There. Whereas if you scroll in a bit and look at what the market was doing when the market was going up, the value was clean. We call that clean versus dirty. This is dirtier value. The other one was clean because it's breakaway. It's like value. Look at all that.
Because we had all these gaps.
Right, exactly. They're all separated from each other. So that means that what happens is
this is even separated. Yeah.
Price moves first, value follows, and that's the way that it should be. Price generally should lead value, but value needs to follow. It's when price goes to a certain area and value doesn't follow, that's when you should be thinking, aha, opposite. I got to be contra here. But as long as value and price are moving up, don't be contra. You shouldn't be thinking, I got to short this market. It's just too high. It doesn't make sense because value is there. People are perceiving value there for the time being, which obviously this shifts on a day-to-day basis.
It's awesome. I mean, that's the importance of the profiles.
Yeah, I mean, that's basically it. That is essentially what the profile does. Is creates a time volume structure that illustrates basically where prices are fair or unfair over time.
Exactly.
That's it. That's it.
Obviously, if they keep it moving value higher, then they're accepting price at higher levels.
Sure, exactly.
Just like the car example, right? They kept, paying for it, and
If the price keeps moving higher and lots of people buy the car at that price, then that is the new price.
That's the new price.
You can't pound on the glass at the dealership and say it was 15,000 last week. This is ridiculous. Why is it 17 now?
Again.
Well, the salesman is going to say, well, we sold 43 units at 17,000 today. So obviously the price is pretty fair because 43 people came in and bought the car at that level. So
That's right.
that's the thing. You got to deal with it.
Yeah,
Yeah.
good stuff.
Yeah.
Yeah, so
I'll be touching upon this stuff in my video over this weekend. I'll kind of do a recap of all of this stuff about how the market's playing out, what we're looking to see possibly next week as well. So it should be good. It's good. It's
yeah.
interesting.
Good. Yeah, I mean, that's the power of the profile.
I think so.
Yeah.
I think so. Well, how are we looking volume-wise today? How are you at 11 a.m.?
Very light again, 629,000.
So usually we're
So-
looking for 1 million contracts to
Correct,
trade.
1 million.
Now on the NYSE, we did pick up a little bit yesterday. We traded 3.7 billion shares.
Normally, we've been like 2.9,
We've been
right?
2.9 to
Okay.
3. We've been right around this 3 billion mark. I thought it was interesting. The volume actually picked up yesterday. And the market did come a little bit lower. And the profiles have been of decent structure in terms of that they're not overly stretched out to the downside. So there is some selling happening there. But why no lower prices are following, I don't know. And one thing that comes to mind, if there is higher volume, is, and again, I hate to, constantly, I always say Daltonism, something that Jim Dalton said once that I thought was just great was, I can't remember exactly how he put it, but the essence of it was the other time frame. And remember, when we say other time frame, we mean the bigger players. You separate time frames into OTF, other time frame, and day time frame. Day time frame would be people like us who do a lot of day trading, who are thinking, and also then there's that middle time frame that is like the 1 to 2 weeks out. You and I are kind of like, we're the lowest. We're definitely day time frame because we day trade and we look for like 1 to 2 day moves and stuff like that. But then there's that other time frame that's playing for the big game, and they have got the big size, and they're thinking in terms of a whole year, for instance, or 6 months to a year or whatever, right?
Exactly.
Right. So Dalton was saying once, the other time frame, and remember, he's coming off of a career of working on a trade desk at UBS and all these other big houses. He has worked on that side. He worked on that side of the street for a long time.
Right.
And he was saying the OTF is often wrong. They're just wrong in bigger size.
Yeah.
So, it's something to think about because you can't, it's very important not to get these conversations twisted to assume that whenever we mention this OTF, that they're like
Always
this,
right.
that they're like this hallowed group of like, like the big hedge fund guys and the pension guys, and like, you got to follow the money because they're always right. No, they're wrong too. They're just wrong bigger.
That's right.
It's 2 million shares of Apple as opposed to 2,000 or whatever.
And that's the whole, of course.
Whatever. Yeah, that's the thing. So I thought that was interesting when he made that comment, and it was a good thing to kind of keep in mind. Like, you know what? There's the other time frame, there's day time frame, but both time frames are wrong often.
And they also, that's where the whole quote unquote moral hazard comes in because they trade other people's money, and
True.
it's not theirs.
Right. Right.
So if they're wrong, and they just say, sorry guys, the market's up or down because of this, and that, whatever.
Sure.
And they also trade by committee, so they take a lot longer to get in positions, out of positions.
That's something that Dalton talked about a lot from his experience of working on that side of talking about how this sort of committee mentality of not being able to make decisions fast enough at market turns that that generally they're not the innovators. He often talks about the different groups of people, laggards, leaders, innovators, late adopters, early adopters, the majority that come into a market. And I don't think that they're really the innovators because you can't turn your battleship around that fast at a higher low.
Yeah, because if someone sniffs out they're buying or selling shares, they'll front run the heck out of it.
Well, and you just can't turn a big boat around like that
Right.
fast is my point. Like, how do you just shift a portfolio that's measured in the billions on March 9th, for instance? March 9th, 2008. That was the big low, right?
That was the big low.
Yeah, you just don't. You can't, you're talking this gargantuan, you can't just, we were short now all along.
Yeah, and by
It
the
just
way, the
doesn't work
volume
that
was
way.
very small down there, so don't
Of
be
course,
thinking,
yeah. Exactly. So that's what I'm saying. The OTF is kind of working in the middle of the move, and little by little they start to get into it, and and whatever. All right, anyway, we got to take a break, and when we get back, we're going to talk about a risk reversal trade in NQ. Brad touched upon the stock a little bit. We're going to talk about what's going on with the stock. If you've been watching the news at all over today, last few days, you should know about this. I think it's pretty
fascinating.
I think it's pretty juicy. Yeah, it's fascinating.
It's like a soap opera.
It is like a soap opera. It is like a soap opera. So anyway, Shadowtrader Uncovered, 90 seconds. We'll see you then.
Cool. See you.
Hast thy sturdy heart been replaced by jelly? No more thine fine torso, instead of yellow belly? Thou art no trader, if thou wilt not take a chance. Just some shoe-staring schoolboy trapped in life's cruel dance. Thy cowardice shall be heralded from here to Persia, if ye remain trapped in thy present fiscal inertia. The market is a maid who must be wooed. Snub her, and only thy own wallet ends up screwed. Into financial impotence thou wilt surely wade, lest thou tap into thy courage and place some trade. Now leave behind the laugher and the joker by using Tasty Trade's preferred broker. Like some May farmer, plant thy trades in fertile soil and watch each day as Liz and Jenny humbly toil to make thy trading choices with wise grappling, so Tasty Trade may turn thy seed to sapling. Into these fecund waters now must thee get wading. For lo, gird thy loins, thou must quickly get trading.
Shadowtrader Uncovered. Shadowtrader Studios.
So yeah.
All right, welcome back.
Shadowtrader Uncovered, live on the Tasty Trade Network.
Great analysis, by the way, on that
Thank you,
profile.
I appreciate that. Yeah, I think it makes a lot of sense. And I'm just going to throw out one last thing in closing. And this is that anything can happen. Nothing is guaranteed. All we have to go on is past information. News could come out over the weekend. Market could gap down 20, whatever the case. But the things that we talk about in the profile are essentially more along the lines of making the decision as to whether or not that was the high for the year and we're never going to test it again for a long time, or do we have a chance of going back there? Mm-hmm. And that's where I want to leave. I want to just leave it on that note, is that this market could slowly grind lower for the next 5, 6, 7 sessions, certainly. But as it's doing so, you want to be cognizant of what type of selling it is. And everything that we just talked about and the signals that the profile gives tells you what type of selling it is. Is it the panicky type that's going to keep us low for a while? Or is it just a slow, grindy type where, you know, no real force of momentum is behind it? That's what I'm seeing, essentially. I think that we're essentially just laying out the case that there's a lot of good odds out there, and there's definitely some things that are pointing to the fact that that may not have been the high for the year.
Absolutely.
You know, and we talked about that endlessly on that show. If you've been following our broadcast from since the beginning, you know, pretty much it's been spot on, saying, well, that was a high, we didn't have excess, or that was this, or here's how things are looking.
Yeah. And in my case, and I told you, full disclosure, I'm short. I'm not aggressively short.
You're more like short in the Nick calls variety, like short
right.
calls.
Like I shorted some calls
right.
In the IWM, and
Russell's been the weakest, so that's worked out well, I think.
Right, but there was a couple different things that made me do that trade real quick, and then we'll get into NQs. But I mean, number one, when the S&P was again 55 points away from the 20 period MA, that is at least a signal that, hey, there's something more bearish. This candle right here was very, very bearish, and I flat out said, this is where I'm testing the waters. I'm not getting aggressively short. I'm going to start selling some upside calls.
Right.
If the midpoint of this big down candle on the 30th gets taken out, then I will buy the upside calls to then hedge it off and turn it into a vertical. Because at that point, I still feel like even if we went back up, we could still go sideways.
Or sideways up and break through.
It's only in November. I did it for the November expiry. So it's limited number of days. I used the expected move on the, based on implied volatility. I sold the calls where they weren't expecting it to go. And, so far it's worked out, really, really well when I started initiating selling the calls 2 days ago. So
Cool.
anyway, again, being short, and being just aggressively short are just two different things. Like Peter said, this market could go down, could go back up to the highs. If it happens, I'm totally ready for it. I don't care.
Sure,
You know what I mean?
sure.
But at this point, if the market goes sideways to down a little bit, even back up a little bit, that faded burn will work in my favor.
It should.
Or it should work in my favor, right? So that's
And knowing which market has about the relative strength, relative weakness between the number of markets is important. Is definitely important. We saw, how the Russell and the S&P are continuing a lot of sync. So sometimes that's a good thing to do. Is not always assume that the short is in the S&Ps. I generally play in the S&Ps. That's my bailiwick. I like S&P big contract options. I like S&P futures, and I like options on futures as well. I've started to toy with those over the last month or so, is using calls and puts on the futures, which is really not much different from the cash. But what I like about it that is really intriguing is that those options trade at the same time as the futures.
Yeah.
So you can be selling calls and puts
other
20,
options, right.
24 hours a day, right? Which is really cool.
Yeah,
It's really cool
that's
because,
huge.
for instance, in this move, you had an overnight high was the high of the move. Well, you could have been selling calls at 2 in the morning or whatever as the market, and then the next day the market didn't go anywhere near there, which is interesting. If you go back to my Twitter feed, you'll see, I can't remember the exact day, but I posted a trade in real time saying that I was. I think there was a snapshot as well of the blotter showing that I was selling calls in the ES futures and trying to add to them on that day. And these were contracts, Brad, that were like $17.90, $17.95. They were getting like 70, 80 cents before the Fed. It made absolutely no sense because all it was the Fed. Because if you looked if you look at the channel in the ES, I think my tweet, my exact words were, I'd like to be short a whole bunch of futures at $17.90. I would totally be willing to take that because that's the top of the channel.
Yeah.
So that's another thing to look at is these options on futures that they haven't been around forever, but it's an interesting way to play.
I can't wait till they do it on all stocks where we can trade options, even after the 4 o'clock close, so to speak.
Oh, you're saying that they would do like a 24-hour,
even when regular equities, because they trade after, of course, after hours.
I don't know if that's something that they would ever add, though, because because the regular trading hour session is really where it's at for the stocks. I mean, the reason it is in the options, it makes sense because it matches the time frame that
Makes
they trade,
sense,
and whatnot.
All right, so anyway, there you go.
On to NQ.
NQ, let's do it. NQ Mobile, very, very interesting story.
Let's go to the daily. Oh, nice. Under 13 now. Very nice. Very nice. So this is a stock that is hard to borrow on Thinkorswim. Can't short it there, but it has options. And to make a very long story short, there is an analyst group called Muddy Waters out there. You can Google all this. It's been all over the TV all day and for a while now. And they are thinking that the company is a complete fraud. They think that 90% of the revenues of the company are bunk. They don't really exist. And today, there were interviews with both that analyst who is spearheading this campaign against them, and also interview with the CEO of NQ. And I never saw more evasion in my life. It looked like John Corzine in front of Congress. That's what it looked like. I don't know where that money is. This is, I don't deal with that. That's not really part of my job to transfer funds like that. Which is amazing because I don't know if you look in I don't know if it's this month or last month, Brad, Futures Magazine, transcripts of phone conversations, recorded. How dumb are these people to have these conversations on recorded lines? Transcripts of Corzine talking to his henchmen there, whatever, people working under him, talking about the transfer of funds out of the segregated accounts, et cetera, et cetera. Read it. Unbelievable. And he's on television in front of the government. No, I don't know anything about this.
I don't know what you're talking about.
I don't know. I don't do that. I'm only the president. What do I know? Unfreaking believable. So this NQ guy is on television today, and the girl from Bloomberg is literally asking him the questions right down the line. Who are your top 3 biggest customers? What provinces in China do you sell in? All evasion, no specific answers, no this is he just constantly goes into some long diatribe about some nonsense. I mean, so I don't know. I think it's looking good. That I think just on the fact of the lack of transparency here, the stock could roll down into the single digits. The Muddy Waters people are adamant that the stock's going to zero within a year. They think it's going to be delisted, et cetera.
Within 12 months.
Within 12 months, they're saying that it's going to be delisted. So the play that I did on it was a risk reversal using a butterfly on the downside, which I sold some calls on to finance. So this is in my Twitter feed. I took a snapshot of it, but we can put the trade back together here on the Analyze tab.
Okay.
So let's go out. Well, what I did is I went out to January for the puts. So let's go out to January for the puts, and the put side is a simple butterfly, which is a 753, I believe. Let me just make sure 100%. I'll look in the monitor tab. NQ 753, right? Do a 753 butterfly. Let's move it up.
Oops.
Right. A little bit higher. And that is a 25-cent debit, correct? And this was earlier in the day when I sent the tweet. I paid a 25-cent debit. I paid 24.5 cents. So same thing. Not wanting to pay 25 cents, although that's pretty cheap for a downside bet. It's more of a lottery ticket that way. I wanted to sell some calls that would pay for it. So I'm not interested in selling calls way out there, but I was interested in selling November calls. So what I was able to do is sell some November calls, and 22s went off at an average of about 17 cents. So some at 20
so you
cents.
went way up. Nice.
Right. In November, the 22 calls. And the reason why this is possible is look at the right side of the screen, Brad. Draw a circle around the implied vol, around the vol.
Exactly.
You know? Because of what's going on, look at the implied volatility, 223%.
And it was over 300%.
Right, exactly. I mean, just the move here out to November, they're looking for possibly a $5 move here. This is a $12 stock. Because remember, that volatility number is calculated out annualized. It's on an annualized basis. So obviously, you can't do 223%. It would be more than what the stock is worth. But when you take how much it could move just until the November expiry and you annualize it, you come up with this gigantic number. So that's why you're able to sell calls that are 14 days out and get 15 to 20 cents for them, even though you're talking about a $13 stock and you're selling 22 calls. That would never happen in a stock that has implied vol of 20 to 40% like normal, or exactly. Even in the teens, how it normally is. You'll see 20 to 40 on earnings or whatever, but normally it's a lot less. So basically, selling the calls naked, which are 14 days to expiry, I received a 17-cent credit on average. Some went off at 15, some went off at 20. Paying 25 cents for the butterfly, my net cost was 8 cents. So $8 per contract is what it cost. And if I believe that the stock is going into the single digits by the end of the year or whatever, obviously the value of the butterfly is going to expand greatly. Max profit here is $2. Yeah. If we were to close at 3 in January, but the butterfly is going to expand as price goes down, so maybe the flies can be sold for 80 cents, 90 cents, $1, whatever. That's the play.
Right now, did you sell enough? Did you sell just enough, or did you sell more to cover the full cost? You know what I mean? Like
the same.
Okay,
no, the debit is 8 cents. Right, right. So yes, I could have. You're right. I could have sold more to completely cover the cost, but I ended up paying 8 cents. That's right. That's a good point. That's a very, very good point. And of course, the calls also could have been sold a little bit closer to give yourself there's a little more risk there.
That's right.
But what I like about this that works well for me, what I think, and by the way, ticks are back at the high of the day. I don't know what the S&P is doing, but ticks are back at the highs of the day.
Yeah.
Yep, futures just popped in the last 5 minutes on a good tick read, and you can see AD lines are crawling a little bit higher. We might actually get positive breath by the end of the day, and that to me that right there is a big signal to the bears. But anyway. What I like about the trade a lot, Brad, is think about it. I have until January for the downside to work out.
But your risk is only for
my real risk is only for the next 14 days. So my thought process is, with the CEO clearly lying on television, you got this Muddy Waters guy, nipping at his heels. He's not being very transparent. I'm thinking, just on the lack of transparency, can the stock rally back up to 22 in the next 2 weeks? I think not. Maybe if I'm wrong, I'll be buying those calls back and I lose a little money. But I like the risk reward here to have that risk for the next 2 weeks when all this news is happening. I mean, do you think, to me, they'd have to completely clear their name and come out with some really good news to right the situation, And what really cemented it for me that the trade was okay was when I saw that CEO come on television and just
There's too many holes.
Completely.
In
I mean, just evading every question, not giving direct answers, and that was it. So.
And the other good thing, Peter, is between now and the third Friday in November, it's only supposed to be about a $5 move.
There you go.
Which
So,
could bring you up to 18 or
so maybe still stay short the calls, right?
Right. So again, I always use the expected move, the implied vol, and of course gives me that
gives you a little more edge of a reference point, right?
And then I guess the only other
Exactly.
thing though, they have earnings now. I don't know whether they're going to come out or not.
And
might be
when
delayed.
is that?
That's on the 12th, which is a couple days before expiry. Expiry this month's on the 15th. So you've only got a couple days after
that's
that.
just fine with me because
That
if
is,
we
yeah.
get very close to that, probably the calls are a nickel offer at that time. Probably.
Yeah.
I wouldn't even mind buying them back for a nickel. We'll see. If the stock stays low, I'm saying.
Yeah, so even if it went down and towards earnings, I mean, it's just going to be money, I think. It's going to be the
Should be okay.
great
We'll
trade.
see. We'll see.
All right.
All right, we got to take a break and back in 90 seconds.
All right, see you.
Early one morning, the market was up. I was trading in dead, wondering if it all turned.